the first thing you really need to know and understand is that the algorithms control the stock market. The algorithms, you have to think like a criminal.
Is that how the stock market works? Okay, please tell us.
Well, I'm not saying everybody's a criminal. Don't get me in trouble. But what I am, and I'll give you a real secret about this place down here in a day, okay? One of the most successful trades out of any trade that has ever taken place in this building.
I am here at the New York Stock Exchange today, right here on the balcony. Today, I'm gonna visit a 40-year veteran trader who used to work on the floor of the New York Stock Exchange. Over the last few decades, this trader has worked at several major financial organizations and witnessed the evolution of trading. Join me today to meet Richie Naso. In this video, you're going to learn how he got into the New York Stock Exchange, his background and career through the evolution of trading, his experience working here at the New York Stock Exchange, pro tips about risk management, trading strategies, including entries and exits for traders today, and even more tips about risk management, trader psychology, and discipline. So please join me today and make sure to smash the like button, and let's go. What's up, traders? I'm here in the New York Stock Exchange with Richie Naso. Hey Richie, how are you today?
Wonderful, Shay. Thank you so much for having me. Thank you.
If you could tell our audience briefly, what kind of trader are you and what did you used to do here on the New York Stock Exchange?
Oh my God. I mean, coming back here brings up memories that you can't even imagine. I walked into this building as a runner, making $60 a week, and got myself into an area where I will humbly say I was one of the most powerful traders down here. I started my business trading one stock, and that was IBM.
IBM? Just that one stock?
One stock in the beginning. And to put that in perspective, IBM was 19.78% of the S&P 500.
Yeah.
Today's biggest component is Apple at 4.78%. So my customers, we controlled from one customer, who happened to be Stevie Cohen, the owner of the Mets. From one customer, I built that up to 30% of the volume a day in the most important stock emotionally and every other way that you can imagine. And the trading experience from that is incredible.
And how many years were you working on the floor here?
Well, I mean, I started on the floor, and I'm almost embarrassed to say this, in 1965, making $60 a week, you know, and so I was here to 2000.
Okay.
And, you know, in between that, I started 2 broker-dealers, opened up an office in London, opened up an office in Switzerland, and catered to, I did not have a retail client, and catered to the largest institutions in the world.
And what was the largest order you executed in one day?
Oh my God. Well, I executed the first program trade orders in the history of the New York Stock Exchange. And there was 10 million shares involved in that.
Oh, wow.
At April 19th, 1983, if you want to put that in perspective.
Wow.
Okay, you know, I had 5 million shares of every S&P name to buy, market on close, and of course the other side of the trade added up to almost 10 million shares.
And what's your education background? Did you have any formal education in finance, I guess?
No, I was just a kid that grew up in a very tough neighborhood in New York City, and had you know, gambled on anything my whole life basically. So my background is high school. I graduated high school, and that's it. That's the end of my background. My gut feel and how my being took to the gambling aspect of this place was extremely important. To be able to be ambidextrous and have 10 or 20 orders in my hand at every different level really played out very, very well for me. As crazy and as basic as it may sound, it was extremely important for what I developed.
Tell us a little bit about what your routine was like working as a floor broker here.
When I had my European offices, I started, I left my home at like 6 a.m. in the morning, came here, went to my office. I had an office right now right across the street, and started reaching out to my European clients and do it with what business owners do with their clients. And then, you know, study the financials, study what's going on, study what's going on around the world.
Yeah.
I mean, this is a business where you have to prepare.
Yeah.
It doesn't really matter what level you're at, folks. From a retail trader, there are no shortcuts in this business. You have to learn, and you have to put in the time to learn. Or else, you know, it is too difficult of a situation, it's too difficult to beat this market.
And then what do you do after the open till close?
You know, what I do is concentrate on the order flow.
Yeah.
I was entrusted with millions of shares of stock at my discretion, from the likes of Vanguard to the likes of the IBM company itself for their corporate repurchase order. And so I would watch the technicals on the big board that's displayed right there. That's the only thing we had. No Bloomberg machines, no nothing.
You didn't have the Bloomberg terminal back then?
No, no.
Okay.
Bloomberg, nobody knew what Bloomberg was.
Okay.
Except a very rich person.
For traders watching this video right now, if they want to eventually do what you did as a floor broker here on the New York Stock Exchange, what do you recommend them to do?
Yeah.
Or study? Like, how should they work to get here?
I mean, you know, there's not one factor involved in learning this business, okay? You need to study charts, you need to know technicals, you need to know emotions, you need to know psychology. I mean, and the first thing you really need to know and understand is that the algorithms control the stock market. The algorithms, not the big institutional players, not the huge hedge funds, not anybody. It's the algorithms that control the market. What do I mean by that? Well, it's very, very simple. You have premium in a market on a day-to-day basis, premium levels, and you have discount levels. And if the market is moving up towards a premium level, the algorithms are going to go to that area to create liquidity.
Okay.
Conversely speaking, if the market is coming down and the direction is lower, the algorithms are going to go. They're going to go to that discount area and they're going to create liquidity. And they're going to create volatility to get the fractions moving. You know, some of the biggest trades are failed breakdowns. I hope I'm not getting too technical.
Oh, that's okay.
Some of the big
viewers need to learn this.
Some of the biggest trades that I make is buying against technical areas that are collapsing. That's when you should be buying, and everybody else, they're pushing out of the marketplace. Sorry.
You hit my Lamborghini. How dare you?
I touched a Lamborghini, I'm sorry. You got to be against the grain in the stock market today, okay? You don't want to short a failed breakdown in a technical area. You don't want to buy a breakout in a technical area. You want to do the opposite in those particular areas.
I see.
I mean, that may be too technical. I'm sorry if it is, but that to me, if you understand, if you hear what I'm saying and think about what I'm saying, it will help you down the line dramatically.
Thanks for sharing so much tips, a lot of technicals with our audience watching this. So how does that relate to how you are personally trading today? Are you using more technicals, and what kind of asset classes are you trading nowadays?
I mean, I trade the ES future market only. I've traded billions of shares of stock. I just don't see the value in buying 500 shares of Microsoft at $330 a share to try to make 50 cents. That's not what I do. That's not the way I think this market should be navigated. I mean, I have different accounts, but I don't trade. Some accounts I just have, you know, income stuff in and blah, blah, blah. But I trade the ES future market on a day-to-day basis only. I rarely have positions going out at night. Sometimes I do, depending.
Oh, okay.
Last night I did.
Okay.
Last night I did. I told you earlier, I was long S&P micro contracts, 5 of them, only because of the huge sell-off yesterday. And, you know, I got up this morning, got dressed to come here and meet you. And before I did, I hit sold.
I see.
Up 11 and a quarter handles. It was a quick $250. And that's it. I paid for my trip in by car.
Okay.
But anyway, I trade the future market only. I think it's a place to be, especially for younger, not younger, so to speak, but traders who are starting out and trying to learn this business. The ES future market becomes incredibly liquid. You know, you can trade the main contract, the mini contract it's called, for $225,000 a contract. Or you can trade the micro contract for about $45,000-$50,000 a contract. And they're liquid. Or the NASDAQ futures, which is a little bit wilder. Or the YM, which is a little bit wilder. But the future markets provide liquidity, and nothing can happen in the stock market without affecting the future markets.
And how do you help the traders you trade with, whether it's futures or any asset class? How would you recommend traders to deal with psychology and managing their emotions?
Yeah. Emotions are the whole deal. You need to stay centered, stay centered. You know, if you get yourself in trouble, and everybody does, and whether you're long and you're getting killed, or whether you're short and you're getting killed, whatever it is, you can get yourself out of it. You can get yourself out of it, but if you're not focused, if you're not centered, it's going to be very difficult. You have to think like a criminal. A criminal.
Is that how the stock market works? Okay, please tell us.
Well, I'm not saying everybody's a criminal. Don't get me in trouble. But what I am saying is, you have to think like a criminal.
Okay.
Because if you think like a criminal, the emotions will not get the best of you.
I see.
If you can figure out what they're trying to do to make you emotional.
I see.
All right, what they're trying to do to make you emotional. All right. You're going to be way ahead of the game.
So I have a question for you. So there's a lot of saying online, retail traders saying that, oh, the market makers, you know, are there. They see your order flow, they see your stop losses, and they intentionally take you out and then swipe it back up. Is that true or not?
100%.
Okay.
100%, and that's part of the thinking. Does anybody know whether that's the case? No. But can you see the reaction from these levels and know that it's true? Yes. And I'll give you a real secret about this place down here in a day, okay? One of the most successful trades out of any trade that has ever taken place in this building is when stop orders are touched off. People are protecting themselves. They don't want to lose money. Where is the biggest, most successful trade? I would venture in this place over the years is when you participate against stop orders. So if the stop orders are touched off and they have to sell down, you want to buy that every time. Or if the stop orders are on the way up, you want to sell that every time. You want to be on the other side of stop orders. So what you just said is 100.
Interesting,
What you just said is 100% accurate. And sometimes in our proprietary charts, it will touch it off. And we have a certain sound associated with it. And when the
orders got taken out.
And when you hear that blip, 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 close your eyes and buy them, or close your eyes and sell them.
Oh, okay, that's a secret strategy right there.
Yeah, I'm telling you, that's proprietary stuff. Where is it based on, folks? It's based on what I learned here as a kid. That's where it's based on.
This is a real Wall Street and New York Stock Exchange experience here. And listen up, these are like some really juicy tips. Okay, so any other tips that you have for traders watching this? How should they get started? Let's say they're a brand new trader, they're navigating the markets today. What kind of tips do you have for them?
You have to be able to manage your risk, okay?
Definitely.
You really have to be able to manage your risk. So people ask me all the time, well, how do you manage risk? What are your parameters? There are no parameters. It's relative to the situation. The market is a chameleon. It changes colors by the second. So there is no way, but everybody's tolerance is different. Everybody's market bank account or market or investment account is different. And so it's all relative to what your tolerance is. And you need to know your personality.
I see.
Every trader that's starting out needs to understand their personality, because it's going to come through, and it's going to be the difference between you winning or losing when you're risking your own capital.
I see. Kind of understand what their own risk tolerance is like,
Yeah,
right? Let's
exactly.
say I can only take $100 risk. I should trade differently than someone who risks like 10,000, let's say.
Exactly. And I'll say something else, okay? Don't put all your eggs in one basket on a particular trade. Single entry trades will kill you.
Oh,
Because If you're trading, think about that. Let me just say it again. Single entry trades will kill you. Is because everybody buy the low for the day and feel comfortable?
Yeah.
No. So you have to have a little more ammunition if you're too early on the trade to bring your average down.
I see.
Okay, you kiss.
Okay.
Single entry trades will hurt you every time.
So it sounds like you're recommending our traders to use an entry system where they scale into trades slowly to build a decent average, let's say around the level you were looking at?
Absolutely, yeah. Okay. Oh, so my level this morning, I don't know where it is right now, my level this morning was 43.66. It broke that level.
Oh, okay.
It broke that level.
Yeah.
But let's just say, and I'm looking at it in hindsight now, folks, I put these signals out there last night, so, you know,
sure.
But 43.66, so let's just say as an example of what we're talking about, you buy 43.66, wonderful. It's a very major technical support area in the market. Okay, but now, wait a minute, I'm a little early, okay? There's some other people selling, and they're knocking it down. Number two, I will not average down a handle or two.
Okay.
You gotta spread it out so you bring your price, you bring your price down. You can't bring your price down if you're trading a future market or anything by a small amount. You got to spread out where your second entry is. Or else you use the first entry and play it out the way it is.
I see.
But don't bunch together the second entry, if you're early.
Is it the same way with taking profit as well?
You know, taking profits, what I like to do is, if I'm right, I would like to put 75% of my profit in. Okay. I like to take 75% of my profit off.
Oh, okay. You scale out too.
Off, and I like to keep the other 25% and let it run up.
Oh, so you trail it on the way up?
I trail it, and then I follow it with stop orders. And at the end of the day, if I'm right, and this is running, and it's running, and I'm feeling real good, I lock in money. I make these trades riskless if I'm right. Riskless.
I see. Yeah, so like if it does go higher, you make even more money, and if it doesn't, you have a stop, so you don't lose money.
I don't lose money, and I could lock in 2 or 3 handles. I can lock it in an amount of money. Again, it's according to, you know, everybody's perseverance. You know, maybe they got killed yesterday and they want to make some money and put it in a bank. You know, I mean, everybody's different with that.
Okay.
But there are certain rules of money management that you need to adhere to. And you need to have a tolerance for how much money you're willing to risk on a trade.
Yeah.
And that's important. So if you're willing to risk $250 on a trade, fine. Then protect yourself down $250. But you need to know this before you make your initial bet.
I see.
Because if you don't give it enough room, if you don't give the trade enough room to develop, you know, you could be wrong and right at the same time.
I see. Or like you can get taken out, you're wrong.
Correct.
And then the trade ends up working in your favor.
Exactly in your favor. So it's very important to identify those areas that make you comfortable. But again, you need to give the trader some time to develop sometimes. You can't just be afraid out of it.
Let's take a step back. I know we talked a lot about trading. What's your opinion on investing? Should people watching this who are brand new, should they start with trading or investing? What's your thoughts? Yeah,
well, look, I mean, I've been on both sides of the fence. As I mentioned, I've traded literally billions and billions of shares, billions.
Yeah.
And right now, I think the way to be, and I know people think, oh, day traders. I don't believe that at all.
Right.
You know, my company is named LPQ, Limited Exposure, Prevent Blowups, which is the one thing every master trader will tell you. If you can prevent blowups, you're way ahead of the game. That's why I developed this company. I'm a firm believer that day trading can be conquered. I see it. I do it every day.
Yeah.
My partners and I do it every day. My subscribers are off the charts happy because of the plan we put in place. So I'm saying to you, this market is very volatile, and to try to learn on the fly with this kind of action going on and volatility, it's very difficult. Listen, this could change, but as of now and in a foreseeable future, day trading this market is the way to be, and that's my opinion.
So you don't believe in buy and hold or like long-term investing?
I mean, you know, dividend-paying stocks. Obviously, I'm an owner of IBM, acting very, very well.
Yeah.
The yield is almost 5%. Why would they want to buy the stock market if you can get 5% for nothing when they're making you crazy? Those are some of the things that I look at and I'm saying, what do I want to buy this for? What do I want to buy that for? What do I want to tie up this kind of capital? I want to keep the capital moving. And I think that day trading this market is the way to do it in the environment that we're in.
Richie, do you have any final messages or tips for our viewers watching this right now?
Yeah, I mean, limit your risk, limit your exposure, put in your work. You have to put in your work. Putting in the work prepares you and gives you the confidence level that you need to really tackle this market every day. So it is not a sprint. This is not a sprint if you want to roll in this market. It's a marathon, and you should be conscious of the fact that it's methodical. Don't think that there's any, get-rich-quick schemes here in the stock market. It's not. But a lot of young people coming in, word of mouth, everybody's got something to say. Oh, I made this, oh, I made that. You don't know what they made, okay? You really don't know. But I tell you that you need to be prepared and you need to study, and there are a lot of ways you could do it, okay? But don't think you're going to come in here and get rich quick doing this, because they'll chop you up, they'll take your money.
For sure.
and Shay, you should know that better than most. They'll take your money.
Humbled, after all. Thank you very much, Richie.
My pleasure. Thank you so much. I appreciate it. And good luck to all you folks out there. Thank you for this.
If you want to see even more of my interviews with experienced traders and floor traders, check out this playlist over here.